All right, let's get right into it. The tech market just hit some serious turbulence, and you guessed it, AI stocks are right in the middle of the storm. In this explainer, we're not just going to talk about what happened. We are giving you a clear, actionable playbook on what you need to do with your money right now. So let's just tackle the biggest question on everyone's mind. After this incredible run, is the AI party finally over? Well, what we're seeing might not be a crash in the classic sense. It feels more like a great rebalancing. The hype is finally being put to the test, and the market is starting to demand real answers. Every shockwave has an epicenter, a point where it all begins. And for this one, it was Microsoft. So let's break down how one single earnings report managed to send a tremor through the entire market. A 12% drop. I mean, for a behemoth like Microsoft, a company of that size, a move that big is a massive red flag. It forces every single investor, from the pros to the person at home, to stop and ask, what is really going on under the hood of this AI revolution? And this slide gets right to the heart of it. This isn't a story about AI is dead. No. This is a show me the money story. See, on one side, you've got Microsoft spending billions, absolute boatloads of cash on AI. But their main profit engine, their cloud business, is slowing down. But then on the other side, you've got Meta, who is actually proving that their AI investments are already paying off by boosting ad revenue. The market's message is becoming crystal clear. Potential just isn't enough anymore. But here's the thing, Microsoft's report didn't happen in a vacuum. It was the spark, yeah, but the fuel for the fire, that was already there. The market is getting hit by 3 huge waves all at once, and it's creating a perfect storm. Okay, so wave 1 is that AI reality check we just talked about. Investors want to see profits, not just cool tech demos. Then, wave 2. The Fed has hit the pause button on rate cuts. That makes money more expensive and kind of chills that whole growth at any cost vibe that fueled the tech boom. And finally, wave 3 is good old-fashioned geopolitical fear, which is pushing investors out of risky stuff like tech and into safer havens like gold and oil. You put those 3 together, it's the perfect recipe for a major market reevaluation. Okay, so that's the diagnosis of the problem. But what's the prescription? This, right here, is the most important part of our explainer today. Let's get into the practical, hands-on playbook for what this all means for your money, and we're going to break it down based on how much risk you're actually comfortable taking. This table is your guide for the next few minutes. It all comes down to your personal risk tolerance. Are you trying to protect what you have? That's conservative. Are you looking for balanced growth? That's neutral. Or are you hunting for those high returns? Then you're aggressive. Find the one that sounds like you, because we're about to break down the exact actions for each one. All right, if your main goal is just capital preservation, you're playing defense. That means raising cash, building up that war chest so you have options. It means moving into defensive sectors. Companies that people need no matter what the economy's doing, like utilities and consumer staples. It also means adding a hedge, something like gold. And maybe most importantly, set strict stop losses. These are automatic sell orders that protect you if a stock falls too far. Believe me, this is not the time to be a hero. Now, for those of you in the middle, the key word is rebalance. The goal here is to take some profits, trim some of that risk from those high-flying AI stocks that have had just an incredible run. Then you rotate that money into value sectors that are showing some real strength right now, like financials and energy. It's all about keeping a balance between growth and stability. And of course, having a healthy chunk of cash on the side gives you a ton of flexibility. And now for the aggressive investors. For you, all this volatility, all this red in the market, it's not a threat, it's an opportunity. The key is to hunt for quality companies that have just been unfairly beaten down. You can make some concentrated thematic bets, maybe on energy or gold miners. You can even use tools like options to leverage your conviction on really top-tier companies. But even for the risk takers out there, cash is still king. You always want to keep some ready to pounce on the next big opportunity. So you have a plan. It's tailored to your profile. But in a market that's moving this fast, you need to know what to watch for. So let's look at the key signals up ahead that are going to tell us where this market is headed next. Okay, keep your eyes glued to these dates. Apple's earnings are going to be a huge test for the sentiment around big tech. The inflation data, that's going to give us major clues about what the Fed's going to do next. And the jobs report will give us a real, honest look at the health of the overall economy. Seriously, these 3 events will set the tone for the entire market for the next few weeks. So let's bring this all together. For the past couple of years, the market has been driven by one simple, really powerful story. AI will change everything. But that story is getting a crucial edit. The market is finally moving on from the dream to the reality.
And this quote just says it all, doesn't it? The entire narrative has fundamentally shifted. It's not enough to have a great AI story anymore. Now, companies have to show a clear path to actually making money from it. This is the new paradigm, and the companies that can answer that question will be the big winners of this next phase.
And all of this leaves us with the ultimate question. Are we just shaking out the weak hands in a healthy, necessary correction that's going to set the stage for more sustainable growth? Or is this the first tremor before a much bigger earthquake? The playbook we've walked through today is designed to give you the tools to navigate whatever comes next.